go on.
Okay.
All right.
So I said how I used to do it. I used to combine it with liquidity.
All right.
As me now, I want to sell.
Right.
If I want to target a particular zone,
yes,
I will look up whether there are bullish wicks.
All right.
If I can see bullish wicks, all those things are liquidities. Then I will know probably price is most likely not to respect the other one below it.
Yes.
And I will look for the one above it.
All right.
If that one doesn't have any, if it has a bullish wick, if the bullish wick is very far,
yes,
then I will know that one is most likely to hold. I will focus my attention on that very one, and it used to go my direction.
Oh, that is good. So if you have that type of strategy, then what you have to do is to build more on that strategy, perfect that system, and stick to it, right? So just one strategy is enough to make you money in the market. So just look for a strategy which is simple for you to implement, to execute, a strategy which is not difficult or complex to understand, and then find a way to make it simple.
Yeah. And then the problem is entry. Most times I wouldn't know conferences, but you said that we are going to come to that.
Yes, we are going to.
There are things that you will see. What is usually making me now is that we have to make my. There are some places, there are some areas I will target my stop loss. Price can't reach there, and I will be patient. It will still go my direction, but that's not the kind of trade I wanted, because most times now you'll be risking a lot. But assuming now you had a confirmation, all you needed to do is to wait. Once you get that confirmation, your stop loss will be smaller. Do you understand?
Yes, you are right. Once you have your confirmation, your stop loss has to reduce. Yes. All right. So today we want to discuss how to make good entries in the market. I think in the beginning of this topic, I told you your entries depends on the type of trader you are. Scalper, day trader, swing trader, position trader. So let's, for example, I would like to use mine as a reference point, right? For example, based on the type of trader I am, I need to create time to analyze the market, because I trade different markets: Forex, crypto, stocks, index, commodities. So you don't expect someone like me to trade on the lower time frame. I can't do that. I can't trade on 1 minute, 5 minutes, 1 hour chart and want to trade all this market and be profitable. It's not possible. Because each market in its own, it has its own characteristics, which you as a trader have to create time to analyze, verify, check again, things like that. And based on the services I render, I have a lot of students. I have to create time for my students. For example, right now I'm with you right now, which means I don't have the full access to the chat. I have to concentrate in this meeting. As well, I run physical classes for students, those who want to get into trading, right? So this has made me to re-strategize that, okay, scalping the trading is not the option for me, and this is why I'm into swing trading and position trading as well. Based on my swing trading and position trading, this was what gave me the opportunity to have the time to help other struggling trader. Because if I were to be a scalper, a day trader, I wouldn't have this time. I have to be busy to trade, or else maybe if I do not want to trade that day, right? But I won't have that sufficient time like I do right now. So based on the type of trader and then my entry, for example, my primary key time frames are the 1 month, weekly, and day chart. These are my primary time frames, right? The 3 month is for me to target long-term goals. Majorly the 3 months, I use them majorly in the stock market, because if I want to invest in the stock market, I have to look out for long-term goals. The stock market doesn't has much liquidity like all these Forex crypto markets, so you have to be ready to hold your position for a long time. So those are the times where I use the 3 months for my exit strategy, right? So primarily I focus on the monthly, weekly, and the day chart, right? As well, if I want to invest in a crypto, if I want to spot trade, that means if I want to hold a crypto asset, I have to check the 3 month as well to say, okay, can I hold this crypto for a long time? So those are the examples of the ways I use 3 months. So based on the monthly, I majorly use them for the Forex, index, commodity market, right? So for me to make my entries, I have to start my analysis from the monthly chart because I'm a swing trader and a position trader. So I need to check out the trade I want to take. Is it a swing trading or a position trading? So if I can check the monthly chart and I can see what I need to see on the monthly chart, then I know, okay, this trade is a position trading. So I have to hold on to this trade. This can elapse or run into more months, right? And if I check the monthly chart, if I can't see what I need to see on the monthly chart as a position trading, then I have to check on the weekly chart. If the weekly chart can give me what I need to see, then I know this is a swing trading strategy or swing trading setup. So the summary is, if I check on my daily chart and I see patterns, setups on the daily chart, whereas I can't see this confirmation or this stronghold of that or setup on the weekly chart, it means I do not have reason to take the trade on the daily chart. Because if I'm making my decisions based on the daily chart, it means I'm no more a swing trader. Because as a swing trader, the weekly chart is my primary key time frame. So what happens in a situation whereby I cannot see a setup on the weekly chart, then it means such setup is not a swing trading strategy. If I'm acting based on what I can see on the day chart, then it means I'm making decision as a day trader, right? So going to the 4-hour time frame to take a trade means I am looking out for scalping on the lower time frame. So for me to make a trade, I must at least see a setup on the weekly chart. Without a setup on the weekly chart, I have no reason to see. But sometimes rules can be broken. You don't have to be rigid. There are some situations whereby I do not need to see setups on the weekly chart, whereby I can use the daily chart. But before I can take a chart or an entry, before I can make an entry on the day chart, I have to see price is as a primary major structure on the chart, or price is at a minor structure with a strong technical factors. Strong technical factors like the weekly trend is supporting what is forming on the day chart. Right? Now, let's use a chart right here. Just wipe out all these things we have right here so I can explain everything. So let's use this chart right here. I'm going to mark some key level structure right here. This is a major swing right here. So I'm going to mark this level right here. And I mark this level right here as a major swings. You can mark this level right here as a major swings or as a minor level. Any way you want to do that, you can mark it, but I prefer to mark it as a minor structure. Right? And we have more levels all above. Okay, now let's zoom in on this price chart. So based on what I can see right here now, we have a strong bullish move right here on this British pound sterling paid against the USD. Right now, we have price at a major swings. Right, this is a key major swing structure. You can tag this as a resistance or as a supply level. They all means point of interest for sellers, because at this level sellers are interested to short, but that doesn't guarantee that the sellers will dominate or defeat the buyers at this level. The bulls can break out right now and continue to move the price up. Yes, that is possible. So what I need to do right here as a swing trader is I have to look out for the major swings in this market. This is the major swing in this market, and this is the major swing in this market. From this high right here, price rally to this major swing low right here, and from this swing low right here, this was the swing.
I'm not seeing the chart. No.
You're not seeing my chart?
No, I'm not seeing.
Wow, I thought you were seeing my chart.
No, I'm
oh,
not.
sorry. I haven't shared my screen. Apology for that. I have to repeat all my everything right now. I haven't shared my screen, so sorry. So next time, just try to recall me, because my chart is the first thing I have to share. So sorry, I thought you were seeing my chart. So can you see my chart right now?
I'm seeing a lot of this.
Can you see my chart now? GBP USD.
Yeah, I can.
All right.
I can see it now.
Let me just enable the watermark here so that you can know the chart we are talking about. So sorry, I have to repeat myself, and I have to do some settings right here so that you can see the watermark of the assets we are talking about. I think this will be under okay, right? So right here is my price chart on the British pound sterling paid against the USD. Now I have to repeat myself so that you can understand what I was saying at the beginning. Now I'm a swing trader and a position trader. So for me to take a trade as a position trader, I have to see a technical factor on the monthly chart, because as a position trader, the monthly chart is my primary time frame. If I want to swing trade, the weekly chart is my primary time frame. So it all depends on what I can see on the monthly chart and the weekly chart that will determine the type of anticipation or the type of bias I need to have in the market. So let's say, for instance, I can see a strong buying sentiment on the monthly chart and with a confirmation on the weekly chart. A buying sentiment on the monthly chart with a confirmation on the weekly chart. Then I know this setup is a position trading. So this setup can last for like a 1 month or more. Now let's say, for instance, I can't see any setup on the monthly chart. I can only see a setup on the weekly chart. And I can see my entry on the day chart. That means this setup, it's a swing setup. So this could take for weeks or maximum of 1 month, right? Now, I stated on the day chart that, now let's say, for instance, I can see a setup on the day chart without a setup on the weekly chart. It means the setup on the day chart is for day trading. So I am not a day trader. I'm a swing trader and a position trader. So in a situation whereby I can see a setup on the day chart without a signal or a setup on the weekly chart, it means such setup is not for me as a swing or a position trader. So that means I have no reason to take that trade. If I should take that trade, it means I am not a disciplined trader. I do not have a plan. I do not have a guide list, right? So that means you are not disciplined as a trader. So now, as a day trader, you focus your primary setup on the day chart and you look out for your 4-hour chart for your entry, right? So before you look out for entries, there are some things you have to understand in trading. There is something we call setup and the entry patterns, right? So for you to make an entry as a trader, the first thing you have to ask yourself is, can you see a setup? Setup is different from entry. A setup can tell you there is a probability of a trade to go up or down, but there isn't any entry yet, right? So in a situation whereby you have a setup and you don't have an entry, it means such setup is not yet ready or confirmed, right? Now, if I want to trade right now based on my trading style, the first thing I have to do on this chart right now is British pound sterling paid against the USD. I have to go to the monthly chart and see what I have to see. So on the monthly chart right here, I have to first just move this right here. So I have to first look out for the key level structure on the monthly chart. So majorly I use the highs and lows of monthly charts. So I look out for the highs and lows. So this is the high right here of this bar. I'm going to make that to be red line. You can replicate this to any time frame of choice. So if you are a day trader, instead of marking your key level like this on the monthly chart, you mark it on the day chart. If you're a swing trader, instead of marking your key level like this on the monthly chart, you do that on the weekly chart. If you're a scalper, instead of doing this on the day chart or the weekly chart or the monthly chart, you do that on the 4-hour chart, right? So your trading style methodology determines your time frame where you mark your major key level structure. So I'm trying to mark my major key level structure right now on the British pound sterling paid against the USD. Now, I have to mark ranges. So in this market right now, this is the peak in this market. Although we have another peak right here, but this peak is far away peak. It's not a close peak. So I don't necessarily need to stress myself with this peak, because this peak is a far away peak. But the closest peak to this market is right here at 1.31146, right? Now, the question now is, before market rally to this zone, which of the swings right here was the major swing that led or that contributed to the rally to this swing right here? Or which of the swings right here was the major swings that led to this push to this peak or to this high? This is the major swing right here, because from this swing right here, we got a push down of price, a bearish move, And from this level right here, we have the reversal of this swing down up. So this is my major swings in this market right here. So I look out for major swing. This is a major swing from this uptrend to this downtrend. And from this downtrend, this is the major swing to this same level. So it means I'm trying to track range, the ranges in this market. The ranges in this market. So if I should move to the 3 months right now, you're going to see we should be in a range. You can see that. So this is a 3-month chart. So this shows us that if this month of August can successfully ensure a strong monthly close above this level, there's a higher tendency for the next month to what? To push in further. And there's a higher tendency for the next 3 months to come to push to this level. So now I'm seeing a long-term goals, long-term objective on the what? On the British pound sterling paired against the USD. You can see that. So I went to the higher time frame. You can see that now from the 3 months. So I'm seeing a bigger image. I'm not seeing what the scalpers and day traders are seeing, because I'm looking out for a bigger move in the market. I'm looking out for 1,000 pips, 500 pips, 300 pips above. I'm not interested in 10 pips, 20 pips, 50 pips. I'm not interested in that. Now, I navigate back to the monthly chart. This is my monthly chart. Now you can see what I have on my chart. I have a range band medium. It means we have been trading in a ranging band medium right since 2016. 2016 to now, that is 8 years. For the past 8 years, British pound sterling have been going in a range band medium. That means the economy of British pound sterling, or the economy of United States and the economy of the United Kingdom and United States have been bouncing, have been a tug of war. Now, right here on the August of 2022, we got a strong bearish close out of this range band medium, and price went down, but instantly we got a liquidity sweep on the monthly chart and price reversed up again. So based on what we have right here on this monthly chart, I can see that there's a higher tendency for the British pound sterling to go up to test the major structure at 1.42090. So I'm viewing the chart right now from the higher level. Please, for those who are joining us for the first time, or for those who are just joining the class, please kindly mute your mic. Mute your mic. If you are joining us for the first time, mute your mic, right? Thank you. Please mute your mic. Now, let's get back to the chart. So, right here now, I'm viewing the chart on the higher time frame. So, this means I have to have a less trade entries. I need to have less trade entries in the weekly chart. I need to have less trade on the monthly chart. But once I have my setup, this can last me for a long period of time. And this has a higher tendency to give me a higher return on my portfolio. So, if I can wait for weeks, months without taking a trade, once the trade setups, then I should be looking out for something big. So if I'm going to be looking out for 1,000 pips, between this level all the way up, we're not talking about 100, 200 pips. But for you to be able to achieve this kind of trade right here, you need to have patience, and not just patience. You need to have money in the bank. Because you can't watch your money, your profit go up, and then the following week, the profit goes down to zero. Do you have the mind to bear that? If you don't have enough capital, enough resources in your account. And it was one of the major key factors I stated in the video I released yesterday on my TikTok account. I told traders, I said, the number one factor you have to ensure before you go into trading is you need to have a financial backup in trading. Because without a solid financial backup, you will easily lose interest in trading. You will easily be discouraged in trading, because without a proper financial background, you won't last in the game or in the business of trading. Because the financial backup is what will give you the confidence, the morale not to give up. So if I'm going to be taking a trade for weeks and leaving my trade for weeks, for a month, it means I have something somewhere to back me up, right? Now, let's get back to the topic. So on the monthly chart right now, I can see we are at the middle of a range, because from this high to this low right here, price is currently at the middle of the range. Now, price is at equilibrium. So, a strong bullish monthly close above this level right there now has higher tendency to fill up the half of this range, which is at this level. This is the half, and this is the second half. You can see right now. So, price is at equilibrium of this range, right from 2016 to 2024 right now, 8 years ago. And take note of what we have right here. I'm viewing the chart based on the monthly chart. You can see what we have right here. This was a range medium that was on 2019, 2020, and 2020 right here. You can see what happened when the price closed above this monthly minor structure right here. What happened? Price went up to test this high. So once again, if we can have a strong bullish close of month, if we can have a monthly bullish close above this level, August, there's a level for price to go up. So this is what I look into before I make my bias on the lower time frame. So sometimes when I'm saying I'm looking out for a buy setup, some traders can be saying sell on the lower time frame, and these traders might think, oh, I'm crazy to be looking out for a buy right now. Because I'm looking out on the higher time frame, I'm viewing the price actions on the higher time frame, right? So that's why sometimes as a trader, you can have a short position, a sell position, and another trader have a buy position, and at the same time both of you can make profit in the market. Yes, because before the market has to go up, the market has to retrace down. So the retracement might be a trade for scalpers or day traders, but retracement is a pushback for a swing trader for a better entry to add up to your buy position. The pushback is a better entry or additional entry for a buy setup on the monthly chart for a position trader, right? So someone's sell position is a retracement for another trader. So now on the monthly chart, I have price at a major high swings. Now let's go to the weekly chart. Now this is the weekly chart right here. But before I go to the weekly chart, let's go back to the monthly chart once again. Now on the monthly chart, there's something I want you to take note right here. Now I have some highs on this price chart right here. You can see how price struggled to break this high on the monthly chart. You can see the highs. Do you see the highs? Price struggled to break this high. Before price broke this high, price went through a lot of vigorous tests. We can say the first test on the 3rd of July 2023. We have a long upper shadow, which shows us the bears are so aggressive right here. And after this long upper shadow, price precipitated all the way down. We have a crash down to the what? To the support of this range medium on the higher time frame, right? And then again, price tested this level continuous time. And whenever there's a test of a key level multiple times, it is what we call clustering of price. And a clustering of price technically means there's a higher tendency for such level tested multiple times to be broken up. And we had what? We had a break of level. Now and again, see another level right here. We have a rising higher low swing structure. Can see that? Now, we have this all the way up. Now you can see how I built my bias from the what? From the monthly chart. Now on the monthly chart right now, I can see an ascending triangular formation with a strong monthly bullish candlestick about to close above a key level structure or a high. So based on what I have right here, if I'm telling you I'm supporting a more bullish entry, you think this guy is crazy. But I'm saying this based on what I can see on the monthly chart. So the worst that could happen on British pound sterling, if British pound sterling make a pushback to test this level right here for continuation. So the best thing I'll be looking at right now is if some traders are looking out to short or this currency pairs, the best one I'll be looking out for entries at this level. That is the 1.28576. And when some traders tell you support and resistance do not work, support and resistance works. This is the foundation of trading. But most traders use it the wrong way. Most traders use support and resistance on the lower time frame. If you want to use or if you want to harness the effectiveness of support and resistance, go to the higher time frame and see how price respects support and resistance. Forget about the trash support and resistance on the lower time frame. Your 5, 15 minute, your 1 hour. Those are sheets. Now let me show you my real chart so that you can see my real chart. This is not my chart. This is the chart I use for my students. Let me show you my real chart so you can see the difference. You can see now, or you can see on this chart, right? I have 15 minutes, 1 hour, 4 hour, right? To 3 months. Now let's go to my real chart. I have a lot of charts right here, but I'm going to show you my real chart so that you can see my real chart. You can see what I do on my charts. You can see how my chart looks like. I have a clean chart. I don't want to see any obstruction or any dirty. I think I have to close all this right down. And they'll open another. Okay, I think I just have to. I'm gonna have to open another chart right here. Okay, now this is my real chart. This is my chart. I have a lot of assets. So let's go back to British pound sterling paid against the USD so you can see what I have on my price chart right here. So I'm gonna be showing you first before we move on my price chart. You can see. Let's check my time frame. I have a setup on Nasdaq 100 here setup right here. I'm going to check that later. So now you can see we have 4-hour chart, day chart, weekly chart, monthly chart, and 3 months. Now the question is, where is my 1 hour chart? Where's my 30 minutes chart? Where's my 15 minutes chart? Where's my 5 minutes chart? They are lost right here. I do not have this. Why should I have them if I'm not a scalper, a day trader? I'm a swing, a position trader. Those time frames are irrelevant. If I should have them on my chart, this chart can confuse me. They can act as a temptation. So the best thing to be a disciplined trader is to get all those shit I do not need on my price chart, to get them off my chart, because I do not need them. If I cannot see my setup, if I'm not unable to see my setup, my entries, my analysis on the 4-hour time frame, then it means I have no reason to be in the market. If I should start my analysis from the 3-month, monthly, weekly, day chart, and I can't see what I need to see on the 4-hour chart, anything else than lower than 4-hour chart is a noise. It's not my strategy. Anything lower than 4-hour time is not my strategy. That means I want to day trade. I want to scalp trade. So if I do that, I'm against my strategy. I'm against my plan. So this is my chart. Now you can see my chart right here now. Let's move to the 3 months right there. So these are what I have right here on my price chart. Now you can see what I told you, how I mark my highs, my major highs and my major lows right here. And I have some minor levels right here. You can see that. You can see what I have right here. You can see that. So now let's get this chart off. Now let's go back to the monthly chart right here. You can see what I have right here. I mark some levels right here, but you're gonna see this level on the lower time frame, right? Now, on the monthly chart, I know the price is bullish, the market is bullish. So if I can have a strong bullish close of candlestick this month, then I should know there's a higher tendency for price to make a pushback next week, or next 2 weeks, or next month. But the key factor right here is whenever price make a pushback to this level, I know it's a significant level, and that's what I call the POI. POI, don't get confused with all these terminologies and abbreviations. POI means point of interest. I know this level right is a point of interest for me. Point of interest for swing traders, point of interest for position trader, point of interest for hedge funds, point of interest for the big players in the market, point of interest for the hedge funds, point of interest for the bankers, for the investment bankers. It means I want to trade with the big guys. And this is why you see the big guys, the banks, the hedge funds, they give you return your investment after 3 months. They use the 3 months calendar. We have 4 business quarters. First 3 months, 1 business quarter. We have the next 3 months, second business quarter. So these guys are willing to pay interest to their investors every 3 months. Because these guys are doing what? They have seen investment as a long-term view, not as a short-term view, right? Now, let's wipe this out and go to the weekly charts. Now we are done with the monthly chart. You can see how I align my chart from the 3-month charts. You can see how I am relating them to the lower time frame. Now you can see the monthly chart now related. Everything is aligned. Now I go to the weekly chart. Now on the weekly chart right now, some traders are looking out for charts. If you're looking out for a chart, there's nothing bad about this. But if you're looking out for a chart right here, it means you want to play what? A counter trend trade setup. Because this is a counter trend trade setup. It is obvious on the weekly chart we are in a bull rally, because right here you can easily define your trend. Right here you can see we have a what? Higher low swing right here, 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 and we have series of higher high swings. So in the market whereby you have series of higher low swings, higher low swings, higher low swings, why should you be looking out for a chart, right? Anyways, before a market will push down, it first has to start on the lower time frame, and this is where you have to know how to manage your risk, because I told you earlier, for the market to push back to this to this structure I constructed on the monthly chart, some traders have to take the other side of this market to push the market down, right? So if you are taking that trade right there, it's a counter trend trade setup, and you have to be very careful. You have to be very smart, and you have to do what? Think in terms of risk, because you are trying to fight the trend. So if you are trying to fight the trend, you have to reduce your risk. And if you are going along in direction of the trend without an obstruction above you or below you, then you can become aggressive in the market. So those are the places you become aggressive as a trader. Right? Now, there are some trade setup when I see in the market, I can decide to just risk 2%. Yes. And there's some trade when I see them in the market, I can decide to risk 5%. For example, right here now, if I'm going to be taking a trade right here now, you do not expect me to risk above 2%. I will never do that. I will never risk above 2% because I know I'm fighting the trend. I can see I'm fighting the trend because I'm viewing the 3-month chart. I can see for the 3-month chart right now, we are having a bullish surge. On the monthly chart, we are having a bullish close. And if this month should result in a bullish close with a bullish reversal candlestick closing to a high, I know there's a high tendency for price to break out. But before a breakout can occur, there can be a retracement for those who miss the bullish breakout to make an entry, or for price to make a rebound of retest or a rebound of confirmation. So if I'm going to be taking a trade against the major price actions on the monthly chart, I have to think in terms of risk and reduce my risk. In fact, I can decide to take just 1% or just not more than 2%, because I'm thinking in terms of what I can sell on the higher time frame. So this affects my risk tolerance, right? Now, the weekly chart is bullish. So what I can see right now in the weekly chart is last week was a bullish candlestick. The bulls, the buyers got in last week without giving the bears any interest, any reason to exercise any interest in this market right there. Right? I think we have someone trying to join us. Do we have someone trying to join us? I can't even see. Right? I'm saying just go back to the chat because okay. So it means last week was a bullish candlestick. So in a situation whereby last week is a bullish candlestick or last week was a bullish candlestick, now the question is, why should I be looking out to trade against last week bullish candlestick? Before I got to do that, I had to see a weekly bearish candlestick against the last or previous weekly bullish candlesticks. This is one of my key factors in my trading rules. For me to take a reversal or a counter trend, I have to see a weekly bar against the previous bar. So if the previous bar is showing me in a bullish candlestick, I have to see this new week to be a bearish candlestick. So which means if I were to trade on British pound sterling USD this week, I won't be looking out for any entry, not until this week will come to an end. I will only be trying to take a trade against this trend only if this week comes to an end. But I told you earlier, I said there are some times whereby I can go against the plan. There are some times whereby I can switch my plan. I can break the rules. But before I break the rules, then it means I have to see a strong, obvious technical reasons for me to go against my rules, to break my rules. Right? Now, if I'm going to be looking out for an entry right here now, let's go to the day chart. So on the day chart, I have to see a strong technical signal bar. I have what I call the setup bar. I have the signal bar. I have the entry bar. I have the retracement entry bar. So on my monthly chart, I have the highs and lows. These are long-term bars. On the weekly chart, I call them the setup bars. These are my setup bars. On the day chart, I call them the signal bars. My signal bars is different from my setup bars. My setup bar is more powerful than my signal bars. Without the setup bars, there's no reason to take a trade on the day chart. But I can break the rules if I can see a strong technical reasons only at a major structure or minor structure. And take note, if I want to take a reversal at a major structure, it is better for me to wait for the weekly setup bar because reversal is tricky and risky. So you have to be very careful. But if I want to go in direction of the trend, I can look out for signal bars at minor structure. So majorly my trend following strategy are usually with signal bars at minor structure. You know minor structure, this was what we discussed in the last class. These are my minor structure, my black lines right here. Now we have levels inside levels, such as we have patterns inside patterns. Now, this is a level inside level. So level inside level, I have a way of representing them. So I'm going to show you how I represent my levels inside levels. So I'm going to use a dotted line. So I know this is a level inside level. So it means this level right here is not as of great significance like the level right here. It means this level right here is the weakest of this level right here. And this level is stronger than this. And this orange right here is the strongest of all. So this is strongest, stronger. This is strong, stronger, strongest. Right? You got that point right now. So my red lines are from my 3 months, my monthly chart. They are the major structures. My minor level right here are from the monthly chart, the weekly charts right now. You can see that. And my day charts right here, my level on the day chart are my what? Ask your question.
No, I wasn't talking to you.
All right. So you can see how I mark my levels right now. So if I tell you I have something different on my chart, I know what I'm saying. Let's go back to my own personal chart so that you can see what I'm saying, so that it doesn't look like this guy is reading the script. Now this is my 3 months right now. Let's go to my monthly chart. This is my monthly chart right here. Now let's go to my weekly chart. You can see my weekly chart. You can see what I mark right here. So you can see that. So this is a proof that I teach what I do. I teach what I do, and this is what works for me. You can see that. So I have this line. This line might be very thin for you to see, just like what I told you. I do not want to see any obstruction on my chart. I always like to see my chart clean, neat, because the neatness, it's something on its own. Now let's get back to the student chart. Now this is the student chart. You can see that right now. So last bar which formed, or the last candlestick which ended last week, was a strong bullish candlestick, right? This is it. Now let's study the highs and lows of last week. Let's zoom in. This was the last week bar, Friday, and this is why you need to understand time, period, circles in trading. These are very important. This is last week Friday, Thursday, Wednesday, Tuesday, and Monday. Now it means the market opens from this level right here. This is Tuesday, Monday. This is Monday. The market opens from this level. The market opens from this level right here. Don't worry, I will change the color of that. I was actually teaching some students the beginning of trading, so that was why I have that kind of a very thick line. Okay, let me just use something like a green, yeah, so that you can see that. So you can see this is the highs and the lows of last week. You can see that. So on the lows and highs of last week, what do we have? Continuous bullish strength. So if I have a continuous bullish strength last week, the question is, why should I be looking out to sell? If I'm selling right here, it means I'm crazy. I don't know what I'm doing, or I'm an amateur trader, or never traded, or beginner trader, or I do not know what I'm trading. Yes, if I should be looking out for short right there, I do not know what I'm doing. So it's surprising when I hear students or traders tell me support and resistance do not work in trading. I don't understand how they use their support and resistance. Now you can see the highs and the lows of last week. 1, 2, 3, 4, 5 candlesticks. This is Monday. Monday is in red. And if you compare the volume of this Monday right here now, you can see the volume is different. Just a small peanut bearish candlestick. So do you mean this candlestick is going to reverse this trend? No. We still need to see consolidation right here. Consolidation to show us this theme, of this bullish trend is now getting weaker. Just like what we had right here. Consolidation occurs right here. You can see the consolidation at this medium right here. You can see the consolidation right here before we went down. You can see the consolidation right here. The consolidation right here. Price struggle, and we had a strong bearish close. If you made your entry right here, you reduce your position size, and you keep on adding as the market keeps on going down, and you keep on adding all the way down. Now let's go to the 4-hour chart. Now on the 4-hour chart, I know this is the low of last week, Monday. It's opened on Sunday. The market opens on Sunday, 10 p.m. GMT plus 1. That is 22. If you are using the 24 hours time, this 22 right here, Sunday. And this is the last. This should be the last day of Friday. This is Sunday right here. Can you see that? So now the question is, if I'm going to be looking out for reversal of this trend right here, the first question I have to ask myself is, have I seen the switch of structure? You can see a switch of structure and the market and the trend is still active. There's a difference between switch of trend and switch of structure. You can see a switch of structure on a trend. Now let me explain what this is all about. Now, okay, let me see what we have. Okay, right here. For example, right here on this market right here now, this is a trend. This is our trend, right? This is our trend. This is our trend line. This is our trend, right? This is our trend line. Your trend line means your trend, right? And I can't really call this a trend line. This is just a line, because when you connect 2 points together with a line, it's a line. You connect one dot and one dot is a line. A trend line has to have minimum of 3 rejections to be a trend line. 2 points connect a line, but 3 points make a trend line. And the 4th test you look at to trade. That is the rule, the concept of trend line. Now, we have this rally up. This is a short-term bull rally, a trend that elapses between weeks. This is a short term. We have short-term trend, intermediate trend, major trend. Major trend elapses more than 12 months calendar period. Why the intermediate elapse more than what? More than half. They are biannual. Why major trends extend more than annual calendar period. And the major trend are within 3 months. Those are quarter, right? So those are weeks. We should be talking about 12 weeks, right? But this may sound crazy for beginner or scalper or day traders. I'm talking in terms of swing position trading, trend analysis, right? Okay. Now, the trend is upward, but we haven't seen a switch of structure right here, because in this market right here, I can easily define the structure for you right here. Now, let's zoom in on this price chart right here so we can see the structure right here. So, on this market right here, this is the last higher low swings, higher low swings, higher low swings, higher low swings. Now, the question is, if you are looking to sell right here, have you seen the switch of structure? If you see a switch of structure, yeah, this is a switch of structure. But as the trend be broken, sometimes you can see a switch of market structure, but the trend is yet to be broken. You come all the way down, you break the trend, you make a retest. So, if you are making an entry at a switch of structure right here, if you want to make an aggressive entry, because there are 3 types of entries in the market. We have the aggressive entry, the conservative entry, and the extra conservative entry. The aggressive entry is based on making entries at average level. The conservative entry is based on making entries at discount level. And the extra conservative entry is based on making entries at at premium level. So, if you're going to be making an entry based on the switch of market structure right here, it means you are using the what? Aggressive entry. If you are waiting for the market to break this trend line right here, and you are making an entry based on the strong breakout, decisive breakout. Remember the factor that determines a breakout. Decisive, strong breakout. That means you are making, and you are trying to follow the false breakout, you are making what? Conservative entry. If you are trying to play it safer and safer, you are waiting for a retest of this trend, you are looking what? For extra conservative entry. That is, you want to reduce your risk, right? Now, let's get back. No. If I'm going to be looking out for a short entry right here, I haven't seen any reason for me to go short. So I haven't seen the right entry right here. So I haven't seen an entry right here. I haven't seen an entry. So these are the things I look out for before I look out for a good entry. And the reality about trading is there is no perfect entry. There isn't anything like perfect system or perfect setup or perfect entry in trading. You just have to take in terms of risk, how to lesser your risk and increase the reward ratio. So there's nothing like perfect or best. If you wait for the best and the perfect system, you wait forever in trading. Because the market will never present you with the obvious things. The market will never do the obvious things so that the majority or the crowd of the market will take advantage. The market will always want to do or present information in a hidden way, hidden format, for those who have an eagle eye to spot it. Because the market never wants the majority to take advantage. Because if the majority of the people in the market will take advantage, then who will have to lose? Who will take the loss? So, now, I haven't seen market switch right here. So I haven't seen any entry right here. Now I have to clear out all these things right here. Now, I do not have any good entries right here, anything right here. Now let's take for instance, let's analyze this switch we have right here on this price chart. Let's analyze this switch right here. We have an uptrend right here. Let's mark the structures. Higher low swings. We have a break of structure right here. We have a low high swing, low high swing. We break the structure right here. We continue up, higher high. higher high, higher low. We have the higher low swing right there. We went all the way up, higher high. And this is a rising double top. It's a kind of very risky patterns in the market. You have to be very careful if you want to trade this pattern, because we have different types of double tops in the market. Because some traders do not know we have different types of top, right? We have different types of tops. We have the equal. No, this is not the equal. We have the equal tops. They have the equal tops. That is the same level. And we have the rising double tops, right? And we have the falling double top. So the one with the lowest risk to highest reward ratio is this, because it has a lower high, and this lower high also helps to show us the momentum has depreciated. But this right here has the highest risk because it shows us the momentum went higher above the previous high. So if we are going to be selling right here, it's very risky unless we look out for a push of this level to give us a more confirmation of a switch of structure. Right here is an equilateral level. So if you break this level right here, the factor needed for you to take an entry right here should be a well-decisive volume breakout. So we are not going to talk about chart pattern today. So that's another advanced section of chart pattern analysis. So sometimes traders tell you chart pattern do not work. Chart pattern works, but most traders, when they learn half, they get half-baked knowledge, and they get into trading and they tell you trading doesn't work. Half knowledge is deadly. In fact, if you do not know anything about it, about the skills, about a profession, it's better than getting half knowledge. Half knowledge, it's dangerous, right? So now we have this market structure right here. Higher low broke out. We got a what? A retest. We go all the way down, all the way down. You can see that. So there wasn't a decisive breakout right here. You went all the way down. You could have made this your entry right here, but it's not as easier when set right here on the price chart that has been printed. No, when you want to execute a real life trade, then you know emotion setting. You want to make decisions. It's very difficult for you to get into the market, but it's easier to analyze the market when the market has been printed. And this is why you see everyone nowadays is not a mentor. Everyone is not a mentor Forex coach, right? So to be sincere with you, if I were a trader in this type of market right here, I wouldn't be looking out for an entry because I don't like the pattern structures right here. I don't like it. I'll be sincere with you. I don't like the pattern setup right here. If I'm going to be sincere with you, because the question is, if I'm going to be looking at making an entry based on what I can see right here, the question is, how many times or how long or what is the consistent rate? So I don't like this pattern right here. If I were you, I won't take this pattern right here, because I want to see a dip down, a break with a strong volume breakout with a pushback. That's the way I trade. So I don't want to involve myself in this type of scanty market right here. If I do this today, what is the probability I repeat it tomorrow it works? So it's about the consistency. It's not about making it today and then tomorrow it fails me. It's about the consistency. So I'm not going to do something like this. I'm not going to take this trade like this. I won't ever do that. So that is that. Now, for you to make a good entry, you have to define factors for yourself, because if you do not have factors, plans in place, when you get into the market, you tend to commit a lot of mistakes because you do not have a plan to guide you. Because the market is a temptation, it's a seal of temptation. When you get in right there, you see a lot of juicy, nice, sweet setups. If you're not disciplined to have a plan, you easily go against your rules, right? So, to make a good entry, you have to have some set of rules in place, right? So, to make a good entry, we need to build the rules. So, we need to build a rules for you. So, I can't really tell you, just like what I was telling you in my Telegram group, when we were talking, you told me you have a question, you want someone that can easily give you answer. Trading is not about yes or no answers. Trading is not about yes or no answers. You can ask me what is the color or you can tell me, okay, what is the color of the human blood? I'll tell you the color is red, right? That is a straight answer. What is the color of the human blood? Red. What is the color of a milk? White, right? I can easily tell you yes. I can choose between options. What is the color of the human blood? A, red. B, white. C, yellow. I can choose A, red. What is the color of the milk? A, white. Or A, red. B, white. C, green. I choose B, white. Trading is not about A, white, B, no. Trading doesn't work that way. So that's why sometimes when you ask questions, there isn't any straight answers to questions in trading. Because trading is about probabilities, defining factors, building confidence factors, right? We have to build confidence factor before we can decide what is a good entry, because a good entry for you might be a bad entry for me, but that doesn't mean that your entry is not a good setup, but it might be a bad setup or bad entry for my strategy. So before we move on to how you can build a good entry, I need you to go, I'll give you an assignment. You need to ask yourself, what type of trader I want to be? The type of trader you want to be will determine how we can set up good entry for you. So the question is, do I want to be a position trader? Do I want to be a swing trader? Do I want to be a day trader? Do I want to be a scalp trader? So the question you answer or the answer you give will determine the good entry for you. Because a good entry for a scalper would be a bad setup for a swing trader or a day trader. And a good entry for a day trader would be a bad setup for a position or swing trader. Just like what I told you right now, this is a bad sell setup for me. But a scalper can be seeing it as a good entry on the lower time. Yes, a scalper will see what? This is an example right here. This is a double top, right? Is it not a double top? Let's clear this off. This is a what? This is a double. I'm going to get it right here. Now, this is the first top. This is the second top. Now, a scalper played this right here and he or she made profit. To the what? To this level right here. And he or she did what? He or she got out. Now, let's calculate the risk-reward ratio right here. You made an entry right here. You have your stop loss above this level right here. And you target this level right here. You made 2.3 risk-reward ratio. That was a nice risk-reward ratio. It was a good setup for scalper. Now let's go to the forward chart. I can't even see my risk again on the forward chart. No, let me get this back. I can't even see my risk again on the forward chart. Let's just try and do that. Because this is the lowest time frame I use, 4 hour chart. If you see 1 hour chart on my press chart, just know
you try switching to 15 minutes or 30 minutes so you can see it.
Yeah, I just want to see you something on the 4 hour chart. I want to use my time frame as a reference of points, right?
Okay.
So now, what you see right here now, I can't see anything right here. Because this is the forward time, is my lowest time frame. I can't see anything right here. I can't see anything realistic on the forward chart. What I'm seeing on the forward chart is a bullish trend. So this is a bad trade for me if I should go for a sell. It's a bad trade. Whereas this is a good trade for a scalper. So there isn't any straight answer to good entry. Now you can see what I meant, but that there isn't any good answer. You can see that right now. On the day chart right now, there's nothing. If you go to the weekly chart, we're not going to see anything on the weekly chart. Unless we move our mouse right there. You can see that it disappeared. It means as a swing trader, I'm not seeing anything to go for sale. Unless I put my mouse right there. Yeah, you can see that. Once I take my mouse away, I can see. On the monthly chart, there's nothing again to be seen. So this would be a nice setup on the 15-minute chart. And if you go to let's check the 15-minute chart, how crazy that can be. I can't remember the last time I went to the 15-minute chart. Okay, let's go to 15-minute chart. I can't remember the last time I checked 15-minute chart on my charts. Now you can see what I told you right here. This is a 15-minute chart double top, they went it all the way now. So this is a good trade setup for scalpers. But I can't say anything existing on the 4 hour or the day chart. So this is just to tell you that your good entry depends on the type of trader you are. So before we move further, so that I have to know, this is a VIP class. This is not a general or video whereby I can easily tell you, oh, swing trader, position trader, scalper, day trader. So your type of trader you want to be determines what we're going to work on to build a good entry. So you have to decide that. And then I'm not going to advise or encourage or convince. I think the best word to use, I'm not going to convince everyone to be a swing or position trader. Because as a swing trader, as a position trader, if you do not have enough capital in your account, forget about it. Because if you're going to be risking 2% on a trade, and you're going to be holding your position for weeks, for months, and you are risking 3 to 5%. So the question is, how many 5% of $100 or $1,000 can you get? 5% of $1,000 is like $50. So are you going to be holding $50 for 2 weeks or 3 weeks for 1 month? So if you do not have at least a standard account, one standard lot account, what is one standard lot account? One standard lot account is $100,000. So if you don't have $100,000 in your trading account, I'm not going to advise you to go into position trading. You can't do that. So the question now is, you have to calculate your estimate of bills. How much do you spend weekly, monthly on your well keep, your bills, your internet, your shelter, your food, your other things, utilities. If you spend $1,000 in a month, now your $1,000, you have to relate it in terms of your percent. So if your 1% of $1,000 of your total estimate of cost of running your life, taking care of yourself monthly is $1,000. So that is 1% of $100,000. So if you are risking 1% of $1,000 as a position trader for a month, and then you are able to make up with 5 or maybe 4% after the trade off for a month, then that $100,000 can sustain you as a position trader. As a swing trader, if you are trading the $100,000, you're a big boy. So as a swing trader, you can do like $50,000, $40,000, on your account, half a standard lot size. But in the case whereby you're having a $10,000, $1,000, whereby we want to risk 1,000 or 1% of 10,000, which 1% of 10,000, that is going to be $100. Am I right? $100, right? That is times 10 will be what, $100. So if you're going to be holding $100 for a month, and you end up making 3%, that is $300 of $100. You make 4%. So what happens when you make loss of $100? So you get back to $300. So can $300 finance your bills in a month? If the answer is no, then this could set in and affect you emotionally, whereby you want to take a larger risk. You have to take a larger risk so that you can cover some bills. You can make enough money to cover your bills. And doing this, there is not sustainability, right? Because you have a higher risk level, and there's a higher tendency for you to blow up your account. So when there's a higher risk involved, there's higher tendency, and when there's higher reward, there's higher risk. So that is where most traders believe they have to go into scalping, so that the more trade they take, the more profit they make. But that is where they get it wrong. The more trade you make, the more risk you get yourself exposed to in the market. Because the more times you get into a trading market, the more you get yourself exposed to the risk. I see trading as a battlefield. As a soldier, you are the trader. The market is the battlefield. So you are going to the battlefield to fight your enemies. So you go to this, look at this way, you are a soldier, you go to battle every day. You go to war every day. So the chances you're going to die in the war is high. Unlike when a soldier goes to a war maybe once in a year, or twice in a year, or maybe thrice in a year. The chances he's going to be killed in a war is lower than someone who goes to war every day. So that's why I see trading. So it's better for me just to take few setup with the best higher, with nothing like best, with higher probability setups, than to take a trade every day. I don't want to bleed every day. If I want to bleed, I should bleed maybe once in a while, right? So that's my mindset about trading. So now, before we're able to build or give the right answer to good entry, I would like you to go sit down, relax, think about yourself, your emotional state. Because number 2 is everything's not about money. You have to be psychologically fit to hold on to your position for a long time. What happens when you hold on to a position 3-4 days and you're in massive profit, and the following 2 days your profit goes down to 0? Do you have the emotional strength to withstand that? That is the question. So finance is important. Do you have money when it doesn't go the way you plan? Do you have money to sustain you? That's another question. And do you have the experience to hold on when things are not going wrong, when things are not going right? And do you have the experience to get out of a bad trade when things are not going right? And do you have the experience to close your trade when things are going right, so that you don't lose everything you have made? So those are another questions we have to answer. So those are the things that will help us to determine how we build a good entry for you. So to make a good entry in the market, just need one setup. You don't need thousands of setup or complicated setup. You just need one setup to build a good entry. So now you can see the reason why I said I am not that trader or mentor who likes to give yes or no to the answer, because trading is not about yes or no. Right? Now the assignment is you go through your drawing board, sit down, think time, take your time to reflect, so we can talk about the best good entry to build for you, right? So, and I trust me, you're gonna enjoy. You're not gonna regret for enrolling my VIP mentorship class, right? You're gonna look back and think about today and say you are happy you made the best decision of your life to enroll into my mentorship program, right? So we're on the right path. And then update. What is the update on your USD Canada trade? Because I can see it seems you are going for a position trade right now, and I'm happy you are doing great on your USD Canada.
I'm still holding it.
Yeah.
It's still bearish.
Yeah.
Still fully bearish. So I'm still holding it. So I'm gonna hold it to the end of this next week.
So you can see. You can see that I gave these trading signals in my VIP or my group. I can't remember. I gave out these trading signals out right there, and I told traders to short all the way down. So imagine those who are head on to this trade right from the. I got this entry on the forward chart. I still remember when I got entry right there. This was the entry on the. This was the bar. I can see analyze this chart once again. This was based on switch of market structure right here, but we haven't seen change of strength right here. You can see we got a what? Higher low, equal lows, equal lows, giving us what? Head and shoulders. Now we broke this head and shoulder with a volume. We went short right here. That was why I said sent out this trading signals to the students. Let them take advantage of this setup right here. Now we had our top at both of these long bearish candlestick. And we did what? We rolled it all the way down. You can see that? So 4.333. And you are still holding on to this trade right from what? Right from the 6th of August. And today right now is 26th of August. So that's almost maybe roughly 3 weeks. You have been holding on to this trade. So you don't have to trade every day to be profitable. Just when you are right, keep on holding to your rightness and keep on capitalizing on it. So that is it. If I should go through the Telegram group, I think I should be able to see because there's a lot of information in the group. Let me just see if there's a way I can just search USD card. Let me search if there's a way I can get the information right here. Can get that. I know I sent out something like this. That should be 20. That should be 6 of 8. Let me check yours. I think something like that was given. If it wasn't, I'll be in the free. Okay. Now this is my evidence. I have it right here. I sent it out to you. You can see it right here. Now you can see I am a trader, a mentor who always have evidence for what I teach. This is it right here. And this is what? August of 7th. I sent it out. But there's something that you can see. August. You can see my screen, right?
Yeah.
You can see August 6th, 2024. So when I tell trader, you don't have to trade every day to be profitable. Imagine a trader has just hang on to this trade and keep on scaling up. You can see that. So with this right now, I believe you should have gotten back the money you used to enroll for the VIP mentorship programs. Only if you are trading on the small account, right? And if you are trading on the big account right now, you'll be planning of getting a Ferrari, right? So entry.
Something that you talked about. You talked about having a larger equity.
Yeah.
So I understand. So that was why I've successfully passed the first phase of 100K. I actually got 200Ks. So I passed the first phases. I'm on the second phase now.
Yeah, I wish you best of luck in your stages, right? I know you're going to succeed. You're going to pass it once you just follow the concept right there. So a lot of people don't want to follow the concept. They just want quick fast, quick answer, quick money, things like that. It doesn't work that way. You have to be willing to follow the process. There isn't any shortcut. So entry was 1.3779. Let's check it out. 1.3779. Let's see. 1.3779. 1.3779. So this is it right here now. So 1.37779. So this is it right here now. You can see right now that I'm not a mentor who tell lies. I'm always. But the truth, are you still right there?
Yeah, I'm here.
So the truth is, people do not want to follow the honest people or the people who say the truth. People always want to follow those who try to tell them lies. People like to paint colorful things for them. So that is it. So when I tell traders, when I get into my position, I hold on, I keep on going down, going, or going up. So that is it. So that is how I trade. I don't have to trade every day to be profitable. Once I just get it right, I hold on to it and I hold on to it forever. That is what I do until the market tells me it is over. If the market doesn't tell me it is over, I have no reason to get out. That is where I am.
I've been able to learn that patience is the key.
Patience is the key.
I'm not even rushing. Even if I end up passing it in the next 2 months, I don't care.
That is it.
Need to relax my mind.
Just relax your mind and keep on making the profit and let the profit roll. And that is it.
Yeah.
Right? So thank you, Joe. So we'll be right here. When should we hold the next meeting?
You have to be the one.
All right, I will update you. My schedule is always, I have to create time for that student as well. We have never traded, beginner, intermediate, experience, consultation, things like that. And I also have to trade and make money for myself and my investors, So I will let you know about my schedule, but we should be able to meet before this week runs out, right? And today is Monday, so we have a lot of more days to go. So we're going to meet before this week runs out. And then I'll be busy on Thursday, Friday, Saturday, because I will be present in my physical office training class in Ibadan, because I have a free trading class seminar for students on Thursday. But before then, I will let you know. Even during that time, I will still have time for you, right? Thank you. And I'm happy for your success. I'm proud of you, right? So keep it up, right?
All right.
All right.
Thank you. Thank you.
You are welcome. Have a wonderful day. All right. Bye. So I'll send you the copy of the meeting once the rendering file is okay. It's done, right?